in today's show, the Bitcoin price action decouples from the stock markets, but not in a good way. As Glassnode points out here, what looks like this time might be different. Also, this is not the decoupling that we wanted. And as shared here, Bitcoin is currently in its fourth longest downtrend in its entire history. And quoting Max Kaiser, Tucker Carlson needs to switch it up a bit and talk to a Bitcoin OG that has lived through several huge drawdowns in Bitcoin since 2011 when Bitcoin was $1. For some perspective, Saylor is great, but he is still a newbie. And quoting the Central African Republic president, Bitcoin will pave the way for a better future. Facts. Also in today's show, Paraguay approves their crypto regulation bill via 40-12 vote. That's right, after El Salvador and the Central African Republic approved Bitcoin as legal tender, other nations like Paraguay are hurrying to catch up and implement regulations for this unique asset class. Also in today's show, here's when Bitcoin hodlers can expect Bitcoin to spearhead a crypto rally, according to billionaire Mike Novogratz. That's right, quoting him here, Bitcoin will lead the next rally when the Fed pauses/flinches. Good projects will follow suit. This industry will not go away. We are just adjusting to the popping of the asset bubble caused by the Fed. Building revolutionary tech and change isn't supposed to be easy. Also in today's show, long-term hodlers double down on Ethereum, according to crypto analytics firm Into the Block. That's right, they show that more than 50% of all the Ethereum in circulation now belongs to addresses that have been hodling ETH for more than 1 year. Also in today's show, macro expert Raoul Pal explained why he's more bullish on Ethereum than Bitcoin, quoting the macro guru, if you believe the future is in the technology and blockchain technology, then this whole digital asset space should outperform the safe haven. That's just how things work. It always works that way, and therefore, there's higher beta. Also, as Plan B shares here, $29,000 Bitcoin feels similar to 2015 and 2018, 2019, which you can see here in the blue. And he updated us here this morning, even if the original $55,000 model was right and the later $100,000 update wrong, the difference is only 2x. Remember that stock to flow model was created in March 2019 when Bitcoin was below $4,000. In my opinion, the correctly predicted 14x rise is worth more than the 2x prediction era. The good news, stock to flow model still points to $500,000 Bitcoin price after the 2024 halving. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium Crypto News Alerts every single day, including weekends, just like this. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Hopefully you're having a fantastic Sunday thus far and enjoying your holiday weekend. This week, the stock markets began to flash just a little bit of green, and Bitcoin is decoupling from the traditional markets, but not in a good way. Bitcoin is down 3%, while the NASDAQ Composite Tech-Heavy Stock Market Index is up 3.1%. Now, May 27 data from the United States Commerce Department shows that the personal savings rate fell to 4.4% in April to reach the lowest level since 2008. Meanwhile, crypto traders are worried that worsening global macroeconomic conditions could add to investors' aversion to risk assets. Now, for example, Invesco QQQ Trust, a $160 billion tech company based U.S. ETF, is down 23% year to date. Meanwhile, iShares China ETF, a $6.1 billion tracker of the Chinese shares, has declined 20% this year in 2022. So to get a clearer picture of how crypto traders are positioned, traders should analyze Bitcoin derivative metrics. Margin traders are becoming more bullish. That's right, margin trading allows investors to borrow crypto and leverage their trading position to potentially increase returns. For example, one can buy cryptos by borrowing Tether to enlarge exposure. Bitcoin borrowers can also short the crypto if they bet on its price decline, and unlike futures contracts, the balance between margin longs and shorts isn't always matched. Now, this chart, which you can see here, shows that traders have been borrowing more USD and Tether recently because the ratio increased from 13 on May 25th to the current, which is 20. Now, the higher the indicator, the more confident professional traders are with the Bitcoin price. It's also worth mentioning that in the 29 margin lending ratio reached on May 18th, which was the highest level in more than 6 months, it reflected bullish sentiment. On the other hand, USDT/Bitcoin margin lending ratio below 5 usually is a bearish sign. Now, option markets entered extreme fear to exclude externalities specific to margin markets. Traders should also analyze the Bitcoin options pricing. The 25% delta skew compares similar buy and sell options. The metric will turn positive when fear is prevalent because the protective put options premium is higher than similar risk call options. Now, the opposite holds when greed is prevalent, causing the 25% delta skew indicator to shift to the negative area. In short, if traders fear a Bitcoin price crash, the skew indicator will move above 8%. And on the other hand, generalized excitement reflects a negative 8% skew. Now, the 25% skew indicator has been above 16% since May 11th, indicating an extremely unbalanced situation because crypto markets and professional traders are unwilling to take downside pricing risks, and more importantly, the recent 25.6% peak on May 14th was the highest ever 25% skew in Bitcoin's history, and currently there is a strong sense of bearishness in Bitcoin options markets. Now, explaining the duality between margin and options, a potential explanation for the divergent mindset between Bitcoin margin traders and option pricing could have been the Terra USD collapse on May 10th. Market makers and arbitrage desks might have taken heavy losses as the stablecoin lost its peg, consequently reducing their risk appetite for Bitcoin positions. And moreover, the cost of borrowing USD Tether has dropped to 3% per year on Aave and Compound, according to loanscan.io. This means that traders will take advantage of this low-cost leverage strategy, thereby increasing the USDT/Bitcoin margin lending ratio. Now, there's no way to predict what would cause Bitcoin to end the current bearish trend, so access to cheap financing does not guarantee a positive price action. And as Glassnode shares here, well, it looks like this time might be different. Also, this is not the decoupling that we wanted, and you can see Bitcoin decoupling from traditional stock markets such as the NASDAQ, but do keep in mind that Bitcoin is on its own vector. And as pointed out here, Bitcoin is currently in its fourth longest downtrend in its entire history. The first one was 404 days, followed by 364 days, followed by 261 days, where we're currently at 200 days. And quoting Max Kaiser, Tucker Carlson needs to switch it up a bit and talk to a Bitcoin OG that lives through several huge drawdowns in Bitcoin since 2011, when Bitcoin was $1. For some perspective, Michael Saylor is great, but he is still a newbie, referring to Michael Saylor being featured on Tucker Carlson time and time again. Personally, I love the Michael Saylor appearances when he speaks on national television, especially considering it's the most publicized television show that there is on Fox News. Now, obviously, I would also love to see Max Kaiser speak his piece and rant, as I always do. And quoting the Central African Republic president, Bitcoin will pave the way for a better future. Facts. Now, as we all know, the Central African Republic was the second country in the world to make Bitcoin a legal tender, more recently after El Salvador announced it back last year. Now, before I break down next story of the day, Paraguay approves crypto regulation bill via 40-12 vote. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin currently trading at 29,300, up about 0.75% for the day, with Ether up 1%, trading just above $1,800, while Solana, Avalanche, Cardano, and XRP are all pumping and in the green. But all right, now let's break down our next story of the day. After El Salvador and the Central African Republic approved Bitcoin as legal tender, other nations like Paraguay are hurrying to catch up and implement regulations for this unique asset class. Countries in Latin America are taking cryptos more seriously and currently striving to ratify legal and other relevant frameworks. Now, due to its inexpensive electricity and crypto-friendly environment, Paraguay has historically been viewed as a mining haven for cryptocurrency mining operations. Despite resistance from the country's central bank, the Chamber of Deputies of Paraguay adopted a plan to regulate cryptocurrencies. On Thursday, in a special session, deputies voted by a margin of 40-12 in support of approving the modified law draft. That's right, in spite of the Senate's initial acceptance of the law in December of last year, the Chamber of Deputies' recent revisions will need the Senate to reconsider the draft before submitting it for presidential approval. Now, the law, which was initially filed in the Paraguayan Senate in July of last year, aims to govern commercial activity involving digital assets. This involves licensing and overseeing cryptocurrency mining firms operating within the nation. The proposed legislation does not make any cryptocurrencies legal tender, so do keep that in mind. Now, moreover, the purpose of this measure is to make Paraguay an international hub for miners because of the country's low electricity rates, which are approximately 5 cents per kilowatt hour, the lowest rate. In Latin America, let's freaking go. Now, the new legislation requires Bitcoin exchanges to register their businesses as virtual asset service providers with the Anti-Money Laundering Agency of Paraguay. The bill states the goal of this law is to control the production activities and commercialization of virtual or crypto assets in order to provide legal, financial, and fiscal security to the firms that profit from their production and commercialization. So there you have it. Let the mass Bitcoin adoption continue as Bitcoin game theory continues in full effect worldwide. Which country do you think will be next to adopt Bitcoin as the legal tender? Let me know in the comments right down below. My personal guess is Mexico. And before I break down next story of the day, here's when Bitcoin hodlers can expect Bitcoin to spearhead a crypto rally, according to billionaire Mike Novogratz. But first, let's take a quick look at the overall crypto market cap, sitting just above $1.2 trillion with just above $50 billion in volume in the past 24 hours. The current Bitcoin dominance is 45.9%, with the Ether dominance at 18%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Avalanche leading the pack, up 16%, trading at $26.40, followed by GMT, up almost 11%, trading at $1.14, followed by XDC, up 8.5%, trading just above 4 cents. Now checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of red, which is a handful in the green, including XCN up 94.1%, and WEMIX up 44%, and Ethereum Classic up 9.7%. And checking out one of my favorite indicators, it's the Crypto Greed and Fear Index. Shows we're currently rated a 14 out of 100 in extreme fear. Yesterday a 13, last week a 14, and last month a 23 as well in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. Galaxy Digital CEO Mike Novogratz, the one with the infamous Luna tattoo on his arm, which will live on forever, is unveiling when he believes Bitcoin, the king crypto, could act as a driving force behind a widespread crypto market rally. The billionaire and Bitcoin bull tells his 465,000 Twitter followers that reasons why he believes that the top crypto asset by market cap is being outperformed by the US stock market, as he shares here on Crypto Twitter. Number one, crypto trades poorly. This is going to be a period that tests people's convictions. We will find a bottom when we do. The break from TradeFi markets is because we don't have corporate buybacks and giant pension rebalancing that is causing this squeeze in equities. And he continues, number two, Bitcoin will lead the next rally. When the Fed pauses and flinches, good projects will follow suit. This industry will not go away. We are just adjusting to the popping of an asset bubble caused by the Fed. Building revolutionary tech and change isn't supposed to be easy. An on-chain analyst, Dylan Leclerc, responded, inform me of those good projects you speak of. Also, did you happen to get a seed round allocation? That's a great question. And someone else posted this infamous picture of the Luna tattoo on Novogratz's arm, which will go down in history. And Novogratz also recently tweeted, alts are down over 80% from the highs. In 2017, it was over 95%. That is down another 70%. My point is picking bottoms is dangerous, and if you do, scale in slowly. And then he corrects himself here. 2018, of course, my bad. But all right, now let's break down our next story of the day. A leading crypto analytics firm says long-term hodlers are buying into Ethereum despite the second-ranked crypto assets price struggles. According to Into the Block's head of research, Lucas, more than 50% of all the Ethereum in circulation now belongs to addresses that have been holding ETH for more than 1 year. Quoting them here, addresses that have been holding ETH for over 1 year, better known as hodlers, have managed to acquire over half of all Ether in circulation. Hodlers' balances are moved inverse to price action. Hodlers have been decreasing their balance since September 2021, but began accumulating in January 2022. Since then, hodlers' balance has grown following each large crash, reaching over 50% of the circulating supply for the first time since 2020. That's right, the long-term hodlers now hold over 50% of the circulating Ether supply, which you can see here in this chart. It shows you ETH hodlers accumulating during the crashes. Now, the analyst further explains, despite the near-term picture looking grim, long-term players continue to double down. On a similar note, A16Z announced their $4.5 billion crypto fund, the largest ever in crypto's history. These investments typically target time horizons in decades, not weeks. Ultimately, it will take time for crypto's vision to come into fruition, and regardless of the short-term uncertainty, long-term market participants maintain their conviction. The analyst also notes that Ethereum saw massive amounts of exchange inflows from the past week, a potentially bearish indicator. And before I break down next play of the day, macro expert Raoul Pal explains why he is more bullish on Ethereum than Bitcoin, and I break down the latest of the stock to flow model predicting a $500,000 Bitcoin price post-halving 2024. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button, that's right, and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play. We're currently receiving over 500,000 downloads per month, and I greatly appreciate your continued support. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next play of the day. Real Vision CEO and macro guru Raoul Pal says he believes the leading smart contract platform Ethereum will likely outperform Bitcoin in the long run. Let me know if you agree or disagree with the Real Vision CEO. In a new interview on Crypto Banter, Pal says that even though the top crypto asset by market cap beats ETH in total trading volume and a number of active wallets, Ethereum has found a way to outperform the king crypto over the last few years. Quoting the macro guru here, if you think of Bitcoin, Bitcoin exchanges more value each week than Ethereum does. Ethereum has a lot of transactions. Transactions are a red herring. Its total value and number of active wallets. And Bitcoin beats both. However, if you look at Ethereum, the change in values, the rate of change in which those two values in Ethereum is higher, which is why Ethereum's been outperforming Bitcoin over the last couple of years. And I found it really useful. It shows what the price is and that the price is pretty good. And when asked if he remains more bullish on Ethereum than Bitcoin, Powell says he still is, and that other altcoins should also eventually outperform the king crypto as well, which he shares here. If you believe the future is in technology and blockchain technology, then this whole digital asset space should outperform the safe haven. That's just how things work. It always works that way, and therefore there's higher beta. And if you're in an exponential uptrend because you're in a network adoption model for the entire space, not just for Bitcoin, then it should outperform over time. It's as simple as that. It's not a value statement about I don't like Bitcoin because X, I prefer Ethereum for Y. It's all about network adoption models. Once you understand that, you free your mind of all the narratives that are in different buckets. So there you have it. Let me know if you agree or disagree with the Real Vision CEO. And to watch the entire video with Raoul Pal himself entitled What's Their Buy Signal, check the show notes below the video in the description. Now checking out the latest updates from Plan B, creator of the Bitcoin stock to flow model. He recently tweeted $29,000 Bitcoin feels similar to 2015, 2018, and 2019, which you see in this chart here in the blue. And checking out a recent tweet that he shared last week, original 2019 $55,000 stock to flow model seems to fit better than later $100,000 update. Interestingly, a refit based on 18 million average stock to flow ratio and 3 years new data confirms the original model. The bad news, $100,000 was probably too high. The good news, the stock to flow model still points to $500,000 Bitcoin price after the 2024 halving. Let me know if you agree or disagree with Plan B, the quant analyst, and he recently just updated us here this morning. Even if the original $55,000 model was right and the later $100,000 update wrong, the difference is only 2x. Remember that stock to flow model was created in March 2019 when Bitcoin was below $4,000. In my opinion, the correctly predicted 14x rise is worth more than the 2x prediction error. I agree 100%, and I would love to see the Bitcoin price surpass $500,000 per coin post 2024 halving. Do you think this is likely to come into fruition? Let me know in the comments right down below. And someone asked him, what about the updating of the model? And he responded, the dotted line is the update using 3 years of new data since February 2019. It is similar / identical to the 2019 model. $500,000 after next halving. Send it. So there you have it. What are your thoughts surrounding a $500,000 Bitcoin price post 2024 halving as stock to flow and Plan B predicts? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Nate wrote, great video once again, JV. Especially loved Tim Draper's thoughts on where Bitcoin and various crypto applications are headed and the use case front. One of the most substantial and well-reasoned set of opinions I've seen on the space as of late. I found myself agreeing with every one of his points, and for his price prediction, if he is correct and Bitcoin hits hits $250,000 later this year in 2022 or early 2023, that likely means that contrary to so many have been thrown in the towel and concluded we're already in the next 4-year halving cycle, bear, his opinion suggests Bitcoin may still be in a mid-cycle correction, just a longer one than expected. Oh my, wouldn't that be incredible? There is a basis and a long-term chart to conclude that, and if that happens, that, my boy, puts $500,000 and $1 million back on the table for 2025, 2026, next cycle top. Go Bitcoin. Now we're talking, fam. $500,000 and $1 million Bitcoin price post 2024 halving. Send it. And our next featured comment comes from Michael Volkman, who wrote, I'm going through another phase where I cannot manage the live feed. Your information is so valuable to me that I manage to view all of the shows I mix. Crypto news alerts are one of the most valuable sources of crypto information. Much love, fam. I appreciate your continued support. One love. And our next featured comment comes from Jenny Jones. Hey, JV and crypto fam, love your show today. Yay. Tim Draper with his $250,000 prediction and his why behind it. Gotta love it. Peace all. Hey, Jenny, glad you enjoyed the show, fam. $250,000 Bitcoin price. Let's freaking go.